give us an update on how the market has traded today ahead of that release of the East African budget there, and what is your initial response? That budget has just come through from the government, and they are forecasting growth of 5.3% in 2010, and that's on the upper end of forecasts that we've had for growth coming through from the likes of the World Bank and the IMF, as well as the Ministry for Planning.
Basically, the markets were a bit dull today. Look at turnover dropped by close to 44%. And basically, investors, institutions, and foreigners, basically, we're waiting to hear what the budget says before anyone makes a move from moving out of a counter or getting into a counter. As much as we had estimates, the speech normally narrows down to get the feel of the fiscal policy for the next year. So the market was generally flat, went up slightly by 9.63 points for the NSE 20. And a couple of counters moved, but there is not really any specific direction that you can say these counters of this sector moved because of anticipation of the budget. It was rather mixed on the movers and the gainers and the losers. You find there's a mixture of agricultural stocks, construction, financial services, and stuff like that.
Now, Bamburi rallying 2.3% today, closing at around 180 shillings. We know that a large chunk of the Kenyan budget is going to be going towards construction and infrastructure build in the country. Could we see some more construction stocks like Bamburi rallying on the back of this? With
this tone of the budget, which even the World Bank has attested to, that they're not really going to reduce their spending on infrastructure because things are not well. They're actually continuing on infrastructure. And stocks like your Bamburi, yes, your River Mining will benefit in terms of most of the cement to be bought in from Kenya. Though they cannot meet the supply, which works for their benefit also. So that means they can sell more even at a higher price. The issue is that if the infrastructure budget is implemented to the letter.
Now let's take a look at the news on the telecoms front that the Kenyan government has called for further cuts in the rate that mobile operators charge each other. Now that's known as the mobile termination rate. The government hasn't confirmed this, but this is said to end the price war that we've seen in the telecom sector there. What kind of response do you think we'll get from telecom stocks into this news?
Well, basically, the only listed telecom stock is Safaricom, and it's a bit worrying when the government comes and not even the government, the president comes and says stop cutting, reducing the termination rates. And as much as they have economic concerns, I think a report of a commission that was constituted by the Prime Minister says that actually only 7% of total telecoms revenue comes from calls to different networks. The majority, which is 93%, comes from revenue from on-net calls, Safaricom to Safaricom calls. So really, it was to protect the big players from losing market share. If you look at the figures that CCK released yesterday, Safaricom market share is now at 69%, down from 79%, a whole 10%. So it's a bit ill-advised from the government, but we hope sanity will prevail.